Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. The idea of the Iraqi dinar reaching a value of $3 for every 1 dinar seems far-fetched and unrealistic when we consider the current economic and geopolitical context of Iraq. Many people have become invested in the prospect of a significant revaluation, but those high expectations are built on a lot of speculation and less on solid financial reasoning. If we take a step back and examine the situation with a more grounded perspective, we can see why such a steep rise in value is unlikely, and even the idea of reaching $1 for every 1 dinar presents a number of challenges. Firstly, Iraq's economy is still heavily reliant on oil, which makes it vulnerable to fluctuations in global oil prices. When oil prices drop, Iraq's revenue declines, and that creates a strain on the country's ability to invest in infrastructure, education, and healthcare, are all areas critical to developing a strong, diversified economy. A diversified economy is essential for creating the type of stability that would support a strong national currency. At present, the Iraqi economy is not in the position to support a $3 dinar, nor even a $1 dinar. It lacks the necessary reserves, productive capacity, and market confidence that would make such a revaluation plausible. Additionally, Iraq is still recovering from years of war, political instability, and internal strife. This kind of instability weakens investor confidence, and without foreign investment, it's nearly impossible to create the demand for the dinar that would lead to such a dramatic increase in value. International markets want to see stability in governance, predictable regulatory environments, and the ability of a country to meet its debt obligations before they commit to buying into a currency in a significant way. Iraq has made progress in these areas, but it's not yet at the point where it could attract the level of investment needed to support such a high valuation of its currency. Let's break down what would need to happen for the dinar to reach even $1, and why that's also unlikely in the near term. To achieve parity with the US dollar, Iraq would need to accumulate substantial foreign currency reserves. These reserves are built up by running a trade surplus, which occurs when a country exports more than it imports. At the moment, Iraq exports a large volume of oil, but it imports most of its food, manufactured goods, and technology. This trade deficit puts a cap on the value of the dinar because it means that Iraq is constantly selling dinars to buy foreign currency to pay for imports. If Iraq could reverse this trend by either significantly increasing its non-oil exports or by producing more of its own goods domestically, it might be able to build the reserves necessary to raise the value of the dinar, but this would take years, if not decades. Another factor to consider is inflation. A sudden increase in the value of the dinar could lead to inflationary pressures that would destabilize the economy. This is because many of Iraq's current contracts and debts are denominated in dinars. If the currency were to suddenly become much more valuable, the cost of these obligations would skyrocket, potentially pushing the government into default. This is a key reason why central banks often intervene to prevent their currencies from appreciating too quickly. They want to avoid the economic shock that would come with such a drastic shift. Moreover, Iraq's banking sector is not yet fully integrated with the international financial system. While efforts are being made to modernize the sector, it still lags behind in terms of transparency, regulation, and technological infrastructure. For the dinar to rise significantly in value, Iraq would need to have a much more robust financial system in place, one that is capable of handling large volumes of international transactions without the risk of fraud or corruption. This is another area where progress has been made, but there is still a long way to go before Iraq can support the kind of currency strength that people are hoping for. Given these realities, the idea of the dinar reaching even $1 is a serious stretch. It's not impossible, but it would require a combination of factors that are currently not in place and may not be for some time. Economic growth would need to accelerate, the political situation would need to stabilize further, and international confidence in Iraq's future would need to rise considerably. These are tall orders for any country, and particularly for one that has faced as many challenges as Iraq. A more realistic expectation might be a more modest increase in the value of the dinar, something in the range of 10 cents for every 1 dinar. While this may seem like a small gain compared to the $1 or $3 scenarios, it would still represent a significant improvement from the current value. For many investors, even this smaller increase would lead to substantial returns. Consider the fact that most people holding dinar purchased it when it was worth a fraction of a cent. If the dinar were to rise to 10 cents, many people could see 5- or 6-figure payouts in US dollars. This kind of return on investment would be more than enough for most people, and it would come without the unrealistic expectations that have led some to believe in the possibility of a $3 or $1 dinar. From a broader economic perspective, an increase to 10 cents would also be more manageable for Iraq. It wouldn't cause the same kind of inflationary pressures that a larger revaluation would, and it would allow the government to gradually adjust to the new realities of a stronger currency. This kind of gradual approach is typically how central banks manage currency appreciation. They aim for small, incremental gains that can be sustained over time, rather than large, sudden jumps that could destabilize the economy. A revaluation to 10 cents would also make it easier for Iraq to transition to a more diversified economy. As the dinar becomes more valuable, the cost of imports would decrease, making it cheaper for Iraq to invest in the technology and infrastructure needed to grow its non-oil sectors. This, in turn, would help reduce the country's dependence on oil and create a more stable economic foundation for future growth. It would also help to attract foreign investment, as international companies would be more willing to invest in a country with a stronger, more stable currency. For those who have been holding on to dinars in the hope of a revaluation, an increase to 10 cents would still represent a major windfall. Even at this slower rate, the returns would be life-changing for many people. It's important to remember that most currency revaluations happen gradually, and the best returns often come to those who are patient and willing to wait for the long-term payoff. The idea of a sudden, massive revaluation to $1 or $3 is appealing, but it's not grounded in reality. A more modest increase, such as 10 cents, is not only more realistic but also more sustainable in the long run. In conclusion, while the dream of a $3 or even $1 dinar may persist among some investors, the reality is that such a revaluation is highly unlikely in the current economic environment. Iraq faces too many challenges, from political instability to an over-reliance on oil, to make such a dramatic increase feasible in the near term. However, a more modest increase to 10 cents is both achievable and desirable. It would provide a substantial return for investors while also allowing Iraq's economy to grow at a sustainable pace. Ultimately, the best outcomes come from realistic expectations and long-term planning, rather than from hoping for a windfall that may never come. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, Hit the notification bell so you never miss an update. See you in the next video.